My next guest says the rate cut points to an increased risk of a hard landing. Let's speak now with Dr. Shen Jianguang, Chief Asia Economist for Mizuho Securities, joining us here in the Hong Kong studio. Dr. Shen, good morning to you. What do you make of this? This, of course, a big cut, the first one since 2008.
Yeah, and also it's a surprise. It's not during weekend or holidays as in the past. So I think it means that the weekend data probably is it's even worse than the market's worst expectation. And I think it's actually a start of monetary policy stance change, shift from neutral, so-called prudent, now it's easing. It's a very clear signal.
Well, let's remind our viewers, this weekend, of course, a lot of important Chinese economic data. We have consumer prices, producer prices, industrial production, fixed asset investment, retail sales, the trade figures, exports and imports. So really numbers that will give us a portrait of the Chinese economy. Do you think there was some alarm, perhaps, in Beijing when they saw these numbers, that they decided to take this action on a work day, on a trading day, instead of during the weekend?
I think that's probably the case, because I believe the top leaders in Beijing has already seen this number. So I think, for example, activity numbers like industrial production, especially investment, will be very weak. So actually that actually prompts them to act, even cannot wait one more day, at cut rate during the weekend. Also, the inflation, I believe, will be also much lower than expected. So it will be lower than the one-year deposit rate, which have been cut to 3.25. So I think inflation is also declining. And PPI is already in a deflation stage, so it probably will go even lower.
Our survey for consumer prices is 3.2%. Do you think there's a chance it will come in significantly less than that?
Not likely. I think it's probably that level or lower. I don't see it will be above that level.
Now, the other key element of what China did yesterday is that it loosened controls on bank lending and deposit rates. So basically, interest rate liberalization. And how significant is that move?
I think that's even more significant than the signal of monetary policy easing, because this is the first step towards interest rate liberalization, so that banks have more freedom to set up interest rate by themselves rather than the central bank. So I think this is actually also the key to the financial sector reform or liberalization, and also renminbi's internationalization. It's all a very key step towards this financial sector reform and renminbi's international role.
And I was doing some reading, and I believe you noted that back in 2008, when they introduced a number of reforms, perhaps they feel in retrospect that they didn't do enough. They didn't hit the mark. Or do you think now they don't want to miss an opportunity to introduce these kinds of key reforms in the midst of this turmoil?
Yeah, that's right. In 2008, everything is about investment, administrative measures, and investment. But this time, they're not only doing investment, but try to do structural change, the reform, in order to make the economy more flexible and more viable. For example, the interest liberalization, and also allow private capital to enter a lot of formerly monopoly sectors. So I think this kind of structural change is also very important to complement the investment push and monetary policy easing.
Well, investors today may welcome this interest rate cut. We saw a rally, early rally at least in the United States. But should they be alarmed that this signals a hard landing in China? And how would you define it?
Yeah, I think that the economy is heading towards hard landing. But then the policy reaction is also very forceful. So that can mitigate some of the fear. But I believe this anyway, the interest liberalization will be pretty bad for the banking sector in the next few years, because the previously guaranteed the very wide interest margin will shrink. That's also probably it's negative.
And we should note, as we reported here at Bloomberg, the lenders in China likely to fall short of loan targets for the first time in at least 7 years. Dr. Shen, we have to leave it there, but thank you for your time. Dr. Shen Jianguang of Mizuho Securities